Hey guys, today we're going to talk about Bill.com. I'm so excited by this company even though it's gone up so much. I'll start by giving you guys a background of what Bill.com actually does, then we'll take a look at its revenues, followed by some charts, and then to finish it off I'll give you 3 reasons why I bought Bill.com and why I think it's going to go higher. Alright, let's dive straight into it. Bill.com is a fintech company that helps automate the financial back office operations of small to medium sized businesses. If that sounds complicated, it's really not. Let me illustrate with a simple diagram. In any business, you have the customer that you sell your product or service to. You also have a record of sales, whether it be a database in the cloud or a filing cabinet. You then have to pay suppliers or wholesalers or service providers like utilities to keep your business running. The money needs to come from a bank account. You then have to record all of these transactions into an accounting system like Xero or Quicken. Now here's where Bill.com comes in. It integrates all of these functions in the cloud and automates them. When somebody emails you an invoice, you can have it go straight into the app and it does the rest for you. It pays the invoice from your bank account, records the transaction in your accounting system, and updates your database. If you've run a small business, I'll bet you've spent countless hours chasing invoices, checking checks, making sure they're not bounced, and then constantly updating your ledger. There is nothing worse as a business owner than sitting at home on a Friday night going through invoice after invoice. Now the app itself is both web-based and mobile, so you can basically use it anywhere. And if online reviews are anything to go by, Bill.com's app seems to be pretty user-friendly. We've talked about what Bill.com does, so let's move on to revenues. Like many high-growth fintech companies, Bill.com is not profitable. Now this does not bother me so long as it is high revenues to compensate. And needless to say, Bill.com is super strong on the revenue front. This is a snapshot of its historical income statement. Here we can see that it's been growing its revenues every quarter since its IPO in 2019. The revenue growth reminds me of Google's performance after its IPO in 2004. Google was sort of like that quiet underachiever that was never really loud or fancy, but ended up wiping the floor with everyone. I think Bill.com's revenue growth somewhat resembles that of Google's back in the day. Even though Bill.com's business is in cloud billing, which is not really the sexiest industry, there's still a lot of money involved in it. Anyway, that's enough about revenues. Let's have a look at Bill.com's chart. Now, if there is ever a poster child for a successful IPO, this would be it. Bill.com IPO'd in late 2019 and went down like pretty much every other stock in March 2020, but has since staged a remarkable rally to be up over 659% since its IPO. Now that might seem ridiculous, but it really has the revenue growth to back it up. I bought in just before last quarter's results were announced about 2 months ago at $198, and after they reported strong quarterly numbers, the stock shot up over 30% in about 2 weeks. It's currently one of my best performing stocks, up nearly 50% since I bought it. Since the earnings report, the stock price has consolidated somewhat, perhaps due to the $1.4 billion stock offering it had last month. The next quarterly earnings is expected to be released around November the 4th, and I would not be surprised to see Bill.com having another blowout quarter. That's one of the reasons why I'm still holding and not taking profits. Also, if we go back to the chart, you can see here that the price has been hugging this short-term support, which is the 10-week EMA, exponential moving average. This is a very bullish sign and is a hallmark of super performing stocks. I wouldn't be surprised to see Bill.com set new all-time highs this week. So that's enough charts. Now I'll give you 3 reasons why I think Bill.com is going to go higher. Number 1, its growth is just getting started. Now it's already gained a solid footing in the US, but its international footprint is still pretty small. Because Bill.com is a cloud software offering, I think the rollout overseas will be pretty seamless. Apparently, according to the CEO, there are around 6 million SMBs in the United States, and Bill.com only has 130,000 as customers. Here you can see the global TAM, or total addressable market, which is multiples of the domestic TAM. Now on to the next bullish reason. Bill.com has great management. It is still run by its founder and CEO, René Lacerte. This man is a fintech entrepreneur with decades of experience in the sector. He started off with a financial technology company called Intuit over 25 years ago and has been active in the industry since. He has a proven track record of building valuable companies. Before Bill.com, he founded and sold a payroll company called PayCycle. Bill.com is about 15 years old and René Lacerte has been at the helm since the start. As investors, we want to see sticky and passionate leaders like this because it usually means that our interests are aligned. Also, founder-led companies are known to be outperforming, as we have seen in Amazon and Facebook. Now, the final reason why I think Bill.com is going higher is because it is making smart and strategic acquisitions in order to consolidate its position in the sector. Basically, it's trying to become the one-stop shop within its industry, and so far, so good. A couple of months ago, Bill.com paid $2.5 billion to acquire a rival called Divvy, which focuses on spend management software for SMBs. Not long after that, it paid $620 million for Invoice2Go, an Australian invoice management business. Acquisitions like this complement Bill.com's existing product offering perfectly, whilst at the same time cementing its position as the leader within this niche industry. So there you have it, folks. Short and sweet. I love Bill.com, but do you? Let me know in the comments below, and if you like this video, please hit the like and subscribe so that you get notified about my next video. I'm also working on a Patreon channel, so keep an eye out on that too. But until next time, happy investing.